Today I want to talk about a gold trade that we closed a little bit earlier in the week. Let me put back over to that screen. We entered the trade on 126, closed it on 214, which we added in to close around 216. So this 214 close was fine. I did take it for a little bit less than 50%. I took $1.10. I went ahead and put the close in order because of a move that I saw going on in gold. And really, I kind of panicked a little bit. I should have followed my trading plan. This trade would have been fine, and I would have made about $10 more on it. So, I made a mistake. I do that sometimes, but I do admit it when I do it, and that's important as I look back at my trades. This is the daily on gold. So I said I entered it on 126, which would have been right here. When gold was trading up in this level. I went ahead and closed it out here on 214. Because gold broke this level right here at 1860. I still had a lot of room. There's really, honestly, no reason that I closed that trade when I did. I should have waited 2 more days. Probably would have got my other $10 out of it. Because you can see, the next day it really did nothing. On the 14th. The next day it went down a little bit. And then today it's popped back up. So I probably would have gotten out of this just fine if I'd left my initial close order out there. Made a mistake. Should have not have closed it when I did. So this is the daily chart, and this is what I made my decision to get out on. But typically, I do use the weekly chart when I'm trading these. Let's go ahead and go back to the weekly chart. All of my trend lines are based on the weekly chart, and so are my Fibonacci levels. So, I had 0.38 support right here that I knew I had coming up. And even bigger, I had an 1800 support, at the 50%. So I had a lot of, or almost 50%. So I had a lot of support here. I had a trend line or a price level right here that it had bounced off a few times. As I said, there's really no reason to close it like I did. Still a good trade. Take a look at it. When I entered it when gold was at 1933, closed it at 1872. Got a $2 credit on it. Wasn't great on the credit. I had another trade going. It was a little bit earlier trade for gold, so I was using this one to adjust the deltas. As I've said in the past, I try to trade these 60 to 90 days out. You kind of somewhat ignore these rules because I do change them just a little bit. This is just for me to keep in mind what it is I'm trying to accomplish on these. So I'm usually at the 60 to 90 day. The one position per week is based on gold or oil or ES or something else. So I wouldn't enter 2 gold strangles the same week. I'd enter them in different weeks. And most of the time, even though I started a 0.3, 0.4 delta when I'm looking for my trades, I will sometimes adjust them to get my overall position into a delta neutral. I was in this trade 19 days, just short of my 21-day target. On annualized, I got a 35, almost a 36% return. It's not terrible. Part of the issue was I took a smaller credit here than I should have. I should have moved these in a little bit more and got a higher credit. But again, the reason I did not do that on this trade was because I was adjusting deltas for another trade. Overall, good trade. Another good closed gold strangle. So far this year, I have been profitable on all my strangles in gold, soybeans, the ES. I've got currently I have a wheat strangle that I'm watching. It almost hit my stop loss, but it's come back and I'm at break even on it right now. So hopefully I will be able to get out of it for a profit. I'm not going to close it at the break even point, and I'm probably not going to add to it. I'll make a decision tomorrow about that on Friday. I've got my full assortment of trades in right now. I've got my full ladder this week because I do a ladder of strangles in various futures. So I don't know that I will add any more, but overall these trades have been really profitable. It was one of the trades I sent out to the group to trade. Decent return on it. I did adjust my buying power a little bit on this. I think originally these were at 2,500 and they've gone up to about 35. So I'm using 4,000 per contract at the moment. This does change from time to time, and if this trade were to go against me and it would use up more of my buying power, then I would change this number. So this is just sort of your starting level. If everything goes perfect, this is the buying power it uses. It's not the risk used, it's the buying power used on these strangles. The risk is technically, infinity, especially to the call side. But so this is just the buying power it uses up, and then I base how many trades I have and how many contracts I do on my personal accounts based on how much buying power I have available. If you have any questions, let me know. Be glad to take them. Be sure to like this video and subscribe to the channel. Thanks.